Hey everyone, wanted to record a video today. One of my friends that I've known for a couple years now, met only a couple times in person, but the beauty of the insurance world nowadays, where so many different communications happen via digital. But Greg Hogan is on with us today, and really this came from just a post that we were part of in a group a couple of months ago, where we were joking around about the importance of the conversation when it comes to insurance today. Ask Greg if he would jump on and just kind of tell us about some of his experiences, some stories about his processes and things like that. But Greg, I appreciate you hopping on today.
Yeah, thanks for having me. I'm really excited to chat. Us insurance
Absolutely.
guys like to talk.
Starting out, one of the things I mentioned it a little bit in the beginning where we were talking about how I feel like what we're seeing a lot of times in the insurance industry is agents trying to figure out how they can talk as little as possible with their prospects and clients. And I know anytime that I see you talk about this or comment on this, you talk a lot about how it's still very important to have that conversation with the prospect of the client. So I know you do both personal lines and commercial lines, but we're going to kind of focus this around personal lines. If it gets into commercial lines, that's fine. But kind of talk to me a little bit about why you believe the conversation with your prospects and clients is still so important.
I think relationships matter, first and foremost. They really matter. So many times we'll get done talking to a client who's come in and they say, we really appreciate the time. We really appreciate you sitting down with us. We have a lot of clients try to tip us after we talk to them. It's kind of bizarre. But again, it's people are trying to buy insurance to meet state regulations on their auto, right? Every state requires, I think every state requires auto liability. And, but there's no state law that says you need to carry physical damage on your car, that you need to carry liability or physical damage on your home, right? There's no law about that, but it's required via a lender. So people just go out and they get policy. You have to get a policy because the mortgage company is telling them to. And so at that point, it's just another cost in the process, and they don't understand like what a homeowner policy can do for them besides speed up or get their loan to close. But once we sit down and start talking with people about having the proper, because what's the one of the biggest things we hear with homeowner? I'm paying 450 for my house. Why are you insuring it for 700? They say that all the time. So once we explain what the coverage items mean, once we explain what a liability portion of the homeowner can do for you and protect you for, that's when the light bulb starts going off. And now they start to understand, because in the absence of knowledge, it's just price that they go off. It's just that simple.
I don't think I've ever talked to someone who has at least told me that they've been offered a tip for their insurance services. But I love hearing that. You mentioned sitting down, whether that's in person or digital. Walk us through a little bit about how you're handling that conversation, how you're handling that process when you are going through either dissecting what they currently have, asking for what you need to go out and quote the market. What is your process?
And normally I'm not writing personal lines, but I do the data collection on it, and I will do the quote videos because my people don't like being on video. But the process goes: someone comes to us, whether it's an online lead, a referral. We get walk-ins sometimes, but walk-ins aren't. Some of them are good, but most of them are not. So let's just say it's a referral, and we get someone on the phone. The very first thing we do is we go through a series of questions. How'd you find us? What are you looking for? Are you looking, based on price, coverage, service? Have you had a service issue? All of those wedgy kind of questions to see what's their issue, what's their problem. And sometimes they say all three, sometimes they straight up say price. But regardless of what they say, we will start to do a data collection and we'll start to feel them out. And if they give us a lot of trouble on that, we kind of just cut them off. If we get through the data collection, and obviously the easiest part of data collection is if they're going to send us their decks, sometimes they just carry them right in or send them to us via email even before we talk to them. We always go into tax records and we look up what the square foot is and verify those things. But then we get a little more detail. and we start asking them, have you put solar panels on? Have you done these other things to your home that are not readily apparent by tax records or by deck pages? Because that's kind of goes to the thoroughness of protecting a risk, and it goes to uncovering other issues with the home. So once we do all that, we'll put together a homeowner quote, and we'll put together generally two options. If they have decent coverage, we'll kind of, I don't like apples to apples, but we'll kind of put together a similar quote,
Yep.
and then we'll put together a preferred quote, a better quote, or a best quote, if you will. And we show them two options and we say, this is what you have, and this is what we can do based on what you have. But here's what we really think you need, and here's why. And that's normally done by me in a quote video with a follow-up from my team on the phone to see if there's any questions or concerns or misunderstandings. But sometimes they'll watch the video 5 times or more. It's
Yeah.
kind of bizarre.
Uh, um, I use quote vids with Advisor Evolved. I'm pretty sure that's who you're speaking about. It's always funny when you wake up in the morning and you see the notification that came through 2 or 3 times at 2 o'clock in the morning.
Mm-hmm.
And I've always, not always, but every once in a while I'll get pushback from people when I'm recommending at the very least do a video proposal. If you're going to do it, might as well sign up with Advisor Evolve. But they get pushback. It's not personal. And my biggest thing is you're never, everybody thinks that it comes down to jumping on the phone, going through the insurance quote. That's the traditional way of doing it. What they don't realize is, okay, if that's a 30-minute conversation, 20% of that or 20 minutes of that's probably things that if you had explained it once on a video, that you've removed that. And if they need that answer again, they can just watch the video again or send it over to a spouse or whoever it might be. But in addition to quote vids through your website, tell us a little bit about what your tech stack looks like. Everybody wants to know, what does your tech stack look like?
Man, we are one of the least techie agencies, and I know that might be a shock to some people, but we just have our AMS, and I don't use a CRM. So I just have my AMS, and my team have a pretty refined way of doing notes and follow-ups and all this other stuff. Through the AMS, we can do marketing campaigns and email campaigns. We can text straight out of the database, which is real nice. But we certainly don't use a CRM. We just have the website, lead generator forms off the website, and then I do quote vids when I release quotes. Sometimes we don't need quotes. I mean, a lot of people don't necessarily care. The quote vids come into play when it's a tricky case, an extraordinarily good result, or sometimes it's a much higher premium, and we need to explain again the coverage and the differences, and that's where they're really successful. But we're not we have all the technology we need without all extra kinds of fluff to zap this and that and do all this stuff.
Yep.
We touch people.
Yeah.
We touch people, and I was trying to think how many people we've written without actually speaking with them at some point, and the answer is none.
Yeah.
Like, we don't do stuff just over text and email. Yeah, we use, e-signature, all that stuff, but we still always talk to people. Somebody does. Sometimes multiple people.
Yeah. But
So we're just
it,
basic.
part of the reason I asked that question is because I wanted to let people know I don't just bring people on to do these videos that are risk advisor users. When I say that, my friendship with Greg, even though it's digital touches most of the time, but it's been a respect from afar, and it's one of those things where I knew that some of the things that we're talking about today would be beneficial. One of the things that we talked about going over are two things: the hard market and both high net worth personal lines. I know that you deal with some of the high net worth personal lines, but what before we get into that, because it'll be a natural segue, but what have you been seeing in the personal line space in your area when it comes down to the hard market, and how are you and your agency adjusting to that?
We are seeing more shopping than ever before. We're seeing more people coming to us specifically with auto. It's almost I mean, we see some packaged stuff, but people aren't normally shopping just their home. Occasionally, but the overwhelming majority is people looking to find a better rate, if you will, on their auto insurance. And sadly, what we're really seeing a lot of is people coming to us who have already had their auto policies lapse,
Mm,
and then they're dead. I
yeah.
mean, we're dead in the water. You know, we do have the only substandard company, if you will, that we have is Progressive. And are
They're
they?
even more, they're moving around away from that now.
Yeah, yeah. And you know, they used to write our no priors. So let me back up 1 second. I actually have two offices. I
Okay.
have an office that I bought that was a lot of Progressive and monoline home because they only had a Progressive auto contract. And that's what we called more of a inner city substandardy kind of office, but it's a fantastic office, very profitable. And then I have my main agency, which does mostly preferred home, you know, real standard and preferred home and auto, you know, personal packages, as well as commercial, group health, Medicare, you know, everything else. So we always had to have an outlet for the no priors in my littler office, but we really don't anymore because Progressive won't take it.
Yep.
And when these people, no matter where they're coming from, they could be a preferred type customer coming from a, I don't know, a Travelers or a Safeco, and if they let their policy lapse, even for a day, that's a problem.
Yep.
You know, we have one company that a preferred type company that used to bend the rules a little bit on no prior in that there was a reason they had no prior. Let's say they moved to New York City and they didn't need a car and they got rid of a car. You know, make
It's,
an exception, but nah, not anymore.
I personally think, especially in the claims situation, this is kind of getting off subject for a minute, but my thought process on the claim situation here recently, I feel like carriers who, for the longest time, would make an exception or would make a little bit of leniency now because of this tough market that we're in, they're having to go by the books. And it's not, oh man, these carriers are, they've changed everything. It's, no, they're more so just following the rules that they've set in place and to say, yeah, it's not really covered, but we'll put it under this coverage to do the right or whatever it might be. It was interesting that you kind of put that on the leniency part of it. Tell me a little bit about what kind of high net worth on the personal lines side, what your office is doing there, and does your process look any different for those type of clientele?
We handle some of that business, not a ton of it. Certainly we handle some of it, and we will generally use Chubb. I know there's other carriers out there, but you know, if I'm dealing with someone like that, I just will use a Chubb. We recently took a case away from Pure who non-renewed somebody, and Chubb wouldn't even take them. They were, you know, they had to go to one of the wholesalers. I don't remember who it was, but we just try to stick everybody we can that fits that model with Chubb. And I'm working on one right now that's a little complicated because it's coming off Kemper with super low pricing, but they really should be with a high net worth carrier. But it's really just even more refinement, you know, and sometimes even more education. I mean, there's this fallacy that big money people or professionals no more. You know, you take a white collar professional, and I don't care what, you know, engineer, accountant, attorney, physician, you name it, they have a lot of schooling and they're very sharp in their area. It doesn't mean they know insurance, and they still need the same level of education, maybe more education than when using a regular market carrier. They like that they have someone that knows the stuff that they don't know.
One of the things that really took me from okay to doing really was when I realized that a lot of those times the people that you described, they need the same level of attention or education because they know what they know really well, but they want that or they appreciate that more because they are well educated. I've noticed that when you take the time to educate those who normally people would look at as if it's your first high net worth case or large case, oh, they know everything. No, it's actually the opposite. They want to know that whoever they're talking to either knows the answer or knows how to figure out the answer. That was the biggest thing for me is I won so many different clients based on telling them on the front end. If I don't know the answer, I'm not going to BS you, but I know how to figure out the answer. And that's what really these prospects and clients they want is someone that is trusted enough to not try to impress them.
Sure. I mean, anyone calling in, we try to help them with the education piece. As soon as they start, pushing back on us and, well, my cousin this and my brother said that, and it's, what do you need me for?
Yeah.
And it's the same with these, one of my best clients, and he's probably worth high eight figures, maybe nine figures. I mean, they've done very,
Done
very
pretty well.
well. But you know what? He came to the office one day and my team couldn't believe it was him because they're expecting to see this really sophisticated,
Yep.
well-dressed, and he shows up in jeans driving a pickup truck and it's just a
Yep.
dude, and it's just, they're just people, but money's less of a problem. Their problem is, am I covered right and am I dealing with the right people?
Yeah.
And it's a mindset shift because
Yeah.
so many of our other customers are not more concerned about price, but certainly price is a bigger.
I think with those two as well, especially those type of clientele, and it doesn't necessarily have to be someone with money or assets or a big house or whatever it is. I think a lot of times people just assume, man, these people are so busy. They don't want to take time talking to me. I think there's an old adage that I'm hiring you instead of going to a direct carrier because I just trust you to take care of it, which I think is absolutely true. But you've got to get to that point where they trust you before you just say, don't worry, I'll take care of it from there. But you can't skip that first rapport building conversation or rapport building situation.
Right. We opened this before cameras were rolling. I was telling you about a building that I'm insuring that a current client is buying. It's about 1.5 million value building, a couple million purchase price, and it's about a $13,500 premium that was just get me coverage.
Yep.
And okay, that's the price. And while I've been on the phone with you, he just emailed the apps back.
There you go.
Um, but that goes from a lot of conversations starting with one line of coverage, which was I wrote their group health. And then we picked up their E&O because it's a professional firm. And we picked up all the regular
Yep.
business lines and we added cyber and EPL. Then we picked up, the guy's individual coverage and life insurance and all kinds of stuff. Started with one, longer sit down discussion. And he literally said, you're here because my business is here and so are you. And I want to
Yep.
work with someone that I can see on a whenever needed basis. And I don't mean that he calls me and I run over there because I'm only over there 2, 3 times a year, but it's that relationship and just I trust you, just do the right thing.
Yep. I bet what would have happened in this situation because of the due diligence that you put in is, let's say you didn't have the relationship with that lender and she had sent it to another agent that she had a relationship with. If this is a guy who you've never really taken the time to build that relationship or rapport with, what easily would have happened is, oh yeah, I'll take a quote. Okay, this looks good. My lender recommended me. I'm using my lender for a reason. I bet because of the relationship and the rapport you built, they would have reached out on their own outside of that. The instant gratification a lot of times is churn and burn. People are I think the hard market that we're in the middle of is kind of discouraging this behavior. But before it, it was okay. Yeah, I have a 15 to 20% closing ratio, but the life cycle is either I close it in 2 days or I don't close it. And it's all about volume. You can't focus on that in this marketplace or really long term, anyways. What we talked a lot about the conversation, we talked a lot about rapport building coming up towards the end here. What is one thing that you would say is so important, whether it's related to the conversation, related to the agency as you grow? What's one thing that you would say to a young agent getting started in this hard market or really any market?
To avoid those who don't value your time like you do. The big time wasters or the little teeny cases. If someone, as a scratch agent, you're sitting there and you haven't had anything happen for a couple hours and someone calls you a renter's policy, $150, and you say, where's your auto? That's with some other carriers. Can I see those and get them together and get that package
Yep.
discount? Do that. Don't just write the renter or don't just write the little teeny $500 retail bop. You're not going to get anywhere. I know revenue matters when you're a scratch agent, but you want to write the stuff that's gonna stick and be on the books and is gonna help you make a real agency. So know what you want and write that. Don't take anything.
It kind of hit me just now, but it's always talked about if you can make it past your 2-year anniversary as an agency owner, you have a good likelihood of making it as an agency. And as you were kind of talking about that, and I'm thinking back to when I was writing basically everything and going out, oh, I'm independent. Let me go find a new market for something. I think obviously that 2-year mark is important, but I think it goes back to on why a lot of agencies don't make it to that 2-year mark or past that 2-year mark. Is because they're willing to write everything and they're getting to 1 or 2 years of renewals where they're not big enough to hire somebody to help with it, but all those people who came to you, those monoline policies that came to you for best price, now they're leaving you for best price somewhere else who is willing to do the same thing. I've told people that for years, encourage people who have made it to the 2-year mark. It just kind of hit me on why that's so important on that 2-year mark. It's not necessarily the 2 years, it's all the work that you did in the 2 years prior.
So many agents, and we see it in the very various groups, they're asking about something out of their wheelhouse, if you will. They're asking, hey, I have this, I don't know, just a crazy risk that's a one-off kind of thing. And it's like, how many hours of research are
Chasing
you
the
going to
commission.
do to find it? Listen, I did that with many years ago with a custom motorcycle manufacturer that was national news for a long time. Took me a while to find a proper market and grow them into a really nice case, but it was worth it because I knew there was enough premium in it. But when you got some little tiny startup who's just, creating a little apparatus to hold your phone in your car, it's going to take you forever to find a market and there's not going to be any premium. So you have to just pass on some things and just go, yeah, this isn't for me. I don't like this industry. I think we all have them. I don't rate certain industries right out of the gate. I just say, no, not my thing. But you have to have that. You can't just take everything.
Love
So
it.
that's the biggest thing. And we still learn it. My team still, oh my gosh, my team still does it though. Stuff comes in and they come to me and I'm like, kick that out.
Yep.
Yeah, but I'm like, no, kick it out. So,
Greg, thank you so much for taking some time to hang out and hop on a call. But there were several moments where I was like, that applies to my agency, that applies to Risk Advisor, that applies to me in general. So I appreciate you taking the time to hang out, and especially the week before Christmas with all that's going on. But thank you so much.
yeah, no, it was a lot of fun. I appreciate you, David.
Absolutely, thank you.
You have a good Christmas.